Biden pitched his plan to raise taxes for the wealthy as part of his election pitch.
Yep.
But it's now slowly being laid out.
Yeah, it is indeed. And I heard you talking a little earlier to Tom Petrovsky about the impact on markets. And certainly it has had an impact on the markets, with big suggestions it could have even more detrimental effects long term. So right now, if you're in the United States, you'll pay a capital gains tax, including a Medicare surcharge, effectively of 23.8%. But under Biden's plan, for anybody with an income of more than $1 million a year, that's going to rise to 43.4%. Now, consider the highest tax on income. In other words, your income tax on your normal wages, that's 37%. So in other words, the tax on your capital gains, if you make a profit, is going to be even higher. So this would effectively really have a big impact in especially the tech industry. So all those people who got stock options, all those people who have got big money that's come out of the tech sector when they've floated companies. So, you know, it's going to have a big impact there.
Investment property too.
Investment properties, potentially, all of that stuff. But as you say, it's the high end of town. So Andy Capron, he works for a company called Region Atlantic in the United States. He laid it out last night.
It's normal to look at a doubling of the capital gains tax rate and say that that changes people's opinions about stocks. What I think is important to keep in mind is this is only the first volley, the first shot across the bow in what is likely to be a long negotiation among different stakeholders in Washington.
Yeah, so the normal event there is stay calm, everything's okay. But you see, Pete, the interesting thing is the Dow Jones dropped 1% last night. And UBS, a big investment bank, said if this gets through, the US markets could drop as much as 7% as a result of it. Now, that means, you know, boom's over, basically, you've got a downward trajectory. So it would certainly change the behaviour and the habits of people investing.
7%.
Yeah.
That undoes a lot of the recent gains,
really
doesn't it? Yeah. Okay, as for the Morrison government, he'll stick with his tax offset, so that means middle-income earners will keep, for now, an extra $1,080 in their pockets.
So think about that. So the US is actually raising taxes. Here in Australia, for middle-income earners, we're keeping taxes low. Now, effectively, tax offset was always one of those things that the government gave a couple of years ago, effectively when other tax cuts were around the place. So it was literally, you know, if you like, a bonus. But the problem is, if you take the bonus off now, those people are effectively going to end up out of pocket. And so $1,080, it's going to cost $7 billion. That's the problem. Even small tax cuts cost a large amount of money. But do bear in mind, of course, that the government has already taken on around about $330 billion in this stimulus.
Yeah, okay. Well, on that, it's all this is about who pays for the $330 billion. It's been spent to stimulate the economy, so in the wake of COVID.
Who pays? And this is the big question. So your answers are you either sell something, right? So what have they got to sell? NBN Co. Well, it might have been Australia Post, but that's clearly political right now. Or you get inflation to rise, which reduces the debts. So today you're going to see on the markets, for example, probably around 0.25% drop after the US markets dropped by about 1% overnight. So the impact here is, you know, probably more muted. But the issue would be still long term. How does Australia pay for that debt that it's got itself into?
Still in good shape, though, our markets.
We are, because we've got so many people working, and that is the absolute key.